In this episode, we speak with Ron Ding, general partner at Norwest, a global venture and growth equity investment firm managing more than $15.5 billion in capital. Since inception, the firm has invested in more than 700 companies and currently partners with more than 250 companies in its venture and growth equity portfolio. Ron joined Norwest in 2011. As a general partner and co-head of the growth equity team, Ron focuses on growth equity investments across a wide range of sectors, including technology, business services, and consumer. His most recent investments include Banyan Software, Datacor, Elite Business Ventures, and SpryPoint. Ron is a two-time awardee of GrowthCap's Top 40 Under 40 Growth Investors, as well as GrowthCap's Top Software Investors. I'm your host, RJ Lumba. We hope you enjoy the show. If you like the episode, click to follow.
RJ Lumba is the managing partner of GrowthCap and the executive chairman of Market Insight Media. He is the host of Growth Investor, a podcast featuring today's best investors, executives, and founders. In the minutes ahead, we'll uncover insights and strategies for accelerating growth and succeeding in business.
Ron, thank you so much for taking the time to chat with us today. It's a delight to be with you.
Yeah, of course. Thanks for having me, RJ.
So as we were just chatting before we hit record here, we first spoke, it's almost like 10 years ago. I actually looked it up in my email traffic, and it was 2016. And I do remember our conversation. I do remember meeting you. And it's interesting because I've been in this space like literally 25 years, just talking to a lot of different investors, and our interaction like stood out. And I think you have great interpersonal skills, and it's wonderful to see how you've progressed in your career. With that said, for the benefit of our audience, tell us a little bit about your background, and then we'll also, of course, spend a lot of time on Norwest.
Yeah, sounds great. Thanks, RJ. And yeah, it's great to get reconnected. It's really interesting what you've built at GrowthCap. I think when you were striking out, the overall growth equity landscape was, in retrospect, actually quite immature relative to today. And it's just grown in leaps and bounds. And it's sometimes been a little tougher on my side just because of the competitive tension, but probably has been very interesting and lucrative for you operating GrowthCap. So congrats on the success. And it's been cool watching the entrepreneurial journey. I can give a quick intro on myself. I've been at the firm for about 14 years, and I specialize in working with founder, family-owned, or what I would call owner-operated businesses, co-leading our growth equity practice. And I think growth equity in the market can have many different definitions. We probably think of ourselves as a little bit more like growth private equity. So we are investing into typically capital efficient businesses that are profitable or approaching profitability. We don't always take control stakes in companies, but we can. And then we typically help companies scale from, let's call it 10 or 20 million in revenue up through the triple digits, hundreds or 200, 300 million of revenue. When I joined, there were 3 people on the team. I think we have maybe 30 people now. So it's also been a really fun journey for me watching the overall team thrive. And the origin story for the group was actually Norwest, the firm, had been around for 60 plus years, much more focused on traditional venture capital investing, Series A, Series B, mostly Silicon Valley businesses. And we had formed this growth equity group almost as a complement to the kind of early stage, high risk appetite, but also, slightly higher failure rate investing strategy. We mostly invest in companies that are outside of the Bay Area. Many of them, I would say, have not gotten the recognition that we feel like they deserve. They're not going to be on the front page of the Wall Street Journal or, in the traditional Silicon Valley rags, but they are critical pieces of infrastructure for businesses and industries, in a number of different areas. And so we're very excited to continue to partner with these operators who are making a huge impact in their communities and their industries, even if it's outside of the bright lights of Silicon Valley.
You mentioned something interesting about competition, and it is like growth equity is a competitive space, but yet firms such as yours continue to do well and find the right investments and companies to partner with. What do you think it is about kind of the lens that you come to the market with? What are you looking for? How have you been able to identify these good investments?
Yeah, so I think there's a couple of components here. The first is just from the very beginning, we've been focused on the same types of businesses, founder, family owned, or owner operated businesses. We think because of that, we have a different empathy for those situations. Oftentimes, what we see is these are companies that are very well respected in their industries. The founders have kind of bootstrapped these businesses, blood, sweat, and tears, and they've built market leaders. And along the way, they've done a number of things well, and maybe a few things that they've deprioritized that now are going to be really important for the next stage of growth. And so we want to come in and certainly offer help where we can, but at the same time, be incredibly respectful and in some cases deferential to the founder and the operator's legacy and the cultures that they've built. We like to call it the invited guest mentality. We're not necessarily, we're an invited guest in your house. We're not roaming the halls, changing the paint on the walls, but we'll have some ideas around how maybe the companies can be operated a little bit better based on some of our other experience. And in a lot of cases, we're going to bring in other seasoned operators to help sit with us on boards who've been there, done that. Hey, you're about to hit this other growing pain that just like I have, and let's try and navigate that in a way that's a little bit more effective. So that's certainly one of the ways is just, sort of the approach and the personality and cultural fit that we've endeavored to have with founders and founder-owned businesses. And then the other is, I would say, more of a structural advantage. So certainly the firm has been around for 60 years. We have a lot of experience in varying sectors. We typically focus on a couple of power alleys. I've spent a lot of time in software, specifically vertical SaaS, and we have good experience there. But structurally, the firm has, from the very beginning, only had one limited partner. And so we've had a 60 plus year relationship with one limited partner, which gives us some unique flexibility in the market. We are not as much in a hurry or pressured to show gains to raise the next fund. We're not kind of privy to some of the fluctuations in investor sentiment and even limited partner sentiment on specific sectors. There have been instances very recently where we've worked with businesses well beyond 10 years. We exited a business last year after we were partnered with them for 12 years. So some of those structural advantages allow us not only to be flexible in terms of the way that we approach an investment, but also in how we work with the companies to maximize value over a long period of time, sustainable compounding. And so that type of strategy and ethos, I think, resonates with this segment of the market. It's certainly not a fit for everyone, and we understand there are certain lanes that we're going to do better in than others. But that's how we've been able to make it work for the type of strategy that we have.
And when we talk about growth equity, we frequently talk about either value creation or value enhancement. And you were speaking to kind of the level of involvement you have in a company. And it seems like there's a spectrum. Like in some cases, you may be very involved, in other cases, less so, because all the company really needs is a little bit more capital and maybe some strategic insight. Can you go further into maybe what you have done in certain situations that really helped a company?
Yeah, and I would try and, again, categorize that into a couple of areas, maybe start with the operational stuff. And I will preface by saying what you said is right. We'll be as hands-on or as hands-off as our operators want us to be. In a lot of cases, we are providing suggestions, but ultimately we defer to the team on what they think is best for the business. Operationally, we end up first and foremost making sure that the quality of the team is proper to continue to scale. And sometimes that means augmenting or upgrading the team in certain ways. We have a pretty deep bench of in-house recruiting personnel to help with that. Sometimes it's just around getting coaching or introducing our CEOs to other CEOs in the portfolio to sort of share best practices. Sometimes it's about recruiting the top industry board member, right, onto our board to provide insights. How that ends up translating, though, in the numbers is we'll obviously dig in on the software side to optimize traditional metrics like gross margin and retention and sales efficiency. These are things that we've seen tips and tricks across our portfolio, areas where we feel like we can add value. For example, there's a business called Yipit Data that we worked with. It's a data business. We invested in 2019, and some of the business model attributes mirrored some of the other businesses, other data businesses that we had come across. And we just noticed the way that they were sourcing some of the information and getting to a end product was maybe a little bit less efficient than we've seen in other businesses. And so introduced them to a couple of executives within our portfolio. And I think within a year and a half, they were able to improve gross margin like somewhere between 500 and 1,000 basis points, which, is very meaningful, right, for the business, both in terms of just operational efficiency, but also having extra cash flow to then invest into other areas. We've helped in other cases with just optimizing the sales and marketing efficiency. We have a number of executives internally that have better benchmarks around, how often should you be reaching out to a prospect? What should a typical conversion rate look like within a funnel? How much coverage do you actually need for the upcoming quarter in order to make sure that we can comfortably hit our numbers? Some of it is a little bit more tactical blocking and tackling, but ultimately empathizing with just where these companies came from. We also have, in many cases, we're working with inexperienced leaders in those areas. Like this is the most scale they've ever seen. And so just helping guide them along the way, I think has been valuable. And then more so on kind of like what I would call strategic or financial, certainly as an investment firm, we're a lot more fluent in, for example, raising debt capital or executing acquisitions. We have a pretty strong sourcing engine here where we're talking to roughly 1,000 companies every quarter. And so a lot of them end up being interesting acquisition candidates for our companies. One of our portfolio companies, Cordy, that I've been involved with for, I think, 9 or 10 years now, I think we've sourced 2 or 3 acquisitions for them, right, over that time period. And so that can be meaningful value accretion for the overall business. As they're focused on operating the day-to-day, we can help them with some of these strategic projects.
And as you were talking through some of the kind of aspects to how you create or add value, I was thinking about your background because you're an engineer by training, and then I think you went into structured product at Citi.
Yeah.
And then banking, if I'm not mistaken. So you've got a very maybe analytical and engineering focused mindset. Do you think that plays into, what you do? Broadly speaking, many people have finance backgrounds, more finance or business backgrounds, and you come in with an engineer's mindset. Do you think that plays into how you help these companies?
Yeah, I mean, I would say maybe sometimes in the early days to the detriment of these companies. So, I mean, certainly I feel like I have maybe a better head start on understanding technology than other people just with the engineering background. But I probably also came into the investment world with some preconceptions that were wrong. Businesses are machines and, you can just kind of build this thing in an Excel spreadsheet and it'll just run in perpetuity. And that's totally not true, right? I mean, ultimately, we are in a human business. The reason companies are successful is because of the people that run them and the culture and the environments that they've created. And so it's been really an education for me as well, in many ways, to understand much more deeply the spectrum of human emotion and psychology, how to work with different types of people, different personalities, and relate to them on a personal level, even if they didn't necessarily have the same background as me or even share the same views as me. So the engineering thing is something that I keep in the back of my mind, but probably much more so as a reminder to make sure that I'm always approaching every situation with a much more, personal and human touch.
And now in your leadership position within Norwest, how do you think about team development and culture?
What's interesting, I mean, certainly I've listened to a couple of your interviews with other industry leaders, and I have a lot of respect for a lot of people in the industry. It's actually just as I've done this, the skill set to be a great investor is not necessarily the same skill set to be a great operator of an investment business. And I think a big part of that is around management, talent development, recruiting, all of the things that sort of make up the lifeblood of our success here. I take a pretty hands-on approach actually to the overall team development. I've been involved with the recruiting process for a number of years. We've, spearheaded a lot of internal training and manuals that, if you go on our drives, you probably still see, my fingerprints on. Beyond that, I'm just catching up with our team very often. So across the team, everybody that I work with has a one-on-one with me probably every week or every 2 weeks, half hour, just to catch up. And Sometimes we'll talk about work stuff. I mean, certainly projects come up, but a lot of times it's more just how you doing? Let's get to know each other a little bit more personally. And I think that overall process of understanding who people are, understanding what their goals are, maybe even what their concerns are, it allows for a more effective working relationship when the situation arises. And hopefully what it allows for also is for each of these individuals to scale a little bit faster, to develop a little bit better, and then that's going to be best for the whole team.
Mm-hmm. It's interesting as kind of I've continued to do this podcast, some of the feedback I've gotten is like a lot of the younger generation that are really trying to either, accelerate their growth equity career or enter the growth equity space, listen to the podcast. What attributes do you typically look for? It could be maybe like an investor early on in their career, or it could be mid-career where they're maybe looking to join a different shop, or they're just trying to get better at their trade.
There's all the sort of check the box things, right? Intellectual horsepower and detail orientation and an ability to be personable, right? In different audiences. I think those things we end up screening for upfront. Investing is an interesting segment because I forget who said it, like to make it big in investing, right? You have to be contrarian and right at the same time. And I think a lot of people end up being sort of conforming and right. And I think those people end up having a decent career. And then there will be a handful of people who are contrarian and wrong, and maybe they have to blow out of there. I think the people who end up having, the most outsized potential are the ones who are willing to be a little bit contrarian, or maybe contrarian is the wrong word, express their own unique point of view and have some level of grounding around that. It's very easy coming in as a junior or mid-level investor to just kind of follow the crowd. And I think doing so will actually allow for some reasonable success early in career. But then you get to a point where you have to have your own point of view. And if you aren't practicing that in some way or living that earlier on in your career, it's a little bit harder to then suddenly develop it. It's hard to have like a sudden mindset shift. So we see people here and we encourage them to just give us their ideas, right? And if they don't like a deal, to speak up. Like everyone should be empowered. It doesn't really matter what your title is. If you're a first year analyst coming out of college, I want to understand what you think about a sector or a company or your viewpoints on a person. And the more you're able to do that at an early point in your career and kind of put yourself out there and really stress test your assumptions, I think the better off you are in the long run.
Tell us about the game-winning shot at Madison Square Garden.
Yeah, it's a really fun story weaved into actually my investing career, right? I feel very blessed to be here because we get to work with a lot of different interesting companies and meet a lot of interesting people. So in this case, we were doing diligence on a sports-related business that unfortunately we did not close our investment on. But we were having dinner, I think it was a Friday or Thursday night, and the person I was sitting next to was a former professional athlete. And he said, "Oh, what are your favorite teams?" I went to middle school and high school in Western Mass, so I'm a Patriots, Celtics, Red Sox guy, typical Mass hole. And he said, "Oh, that's interesting. I'm actually having a bunch of the Patriots come over to Madison Square Garden on Saturday. We're doing a charity game, but then afterwards we have the court for another hour or two. Do you want to come by?" So, I get back to my hotel that night, change my flight. I wake up in the morning, go to Dick's Sporting Goods, buy a pair of sneakers and some shorts, and I show up. And so it's me and probably 5 or 6 other professional athletes. And I think, honestly, they were probably just taking it easy on me. The first shot that I put up, someone swatted it literally so far into the stands that I couldn't see it anymore, right? So, they were probably just taking it easy on me and they weren't paying attention to me. And so I got to hit the game-winning shot on them in MSG. So that was a really cool moment. And one of many experiences that you get working in growth equity is just meeting these interesting people and then having these stories to walk away with.
That's awesome. I presume you played a little bit of basketball growing up.
Yeah, much more recreationally. But yeah, that was a fun experience.
Well, we're entering into the tail end of the conversation. I have 2 final questions I'd like to end with. One is, can you tell us about a person who has had a profound influence on you?
Yeah, for sure. So, I mean, many people in my life have helped me along the way. Probably one of the most impactful is my dad. He was my biggest fan, but also my strongest critic, right? Growing up, always pushing me to be a better version of myself. And certainly there were points in time when I was younger when I really didn't like that. But as I got older, I came to very much appreciate just the approach that he took. He's also, a PhD by training, and he's, deeply technical, very logical, very scientific. It's hard to win an argument against him. And so sometimes when I think about the CEOs or companies that we're approaching, and, a lot of times they're 20, 30 years in an industry, right, have so much more knowledge than we do, and probably typically pretty resistant to talking to outsiders and especially people that they don't know. I kind of think about, okay, what would I have to actually do to convince my dad, if my dad was running this company, to open the door and have a conversation with me? It just sort of motivates me to be that much more, detail oriented around my research, and have sort of punchy points and be very compelling in the way that I approach things. But yeah, he's very instrumental in my development, as has my mom and many other people in my family and friends. So I'm very, very lucky to be surrounded by so many people who've helped me.
That's great. Last question. Can you tell us a little bit about what you like to do in your free time?
So I have two young kids. I have a 3-year-old and a 5-year-old. And so that does occupy the majority of my time. But I think beyond that, yeah, maybe you'll find me at an indoor basketball court playing some pickup basketball on the weekends as well from time to time, trying to relive my glory days at MSG.
Excellent. Well, Ron, thank you so much for taking the time to chat with us today. It's been a wonderful conversation.
Yeah, thank you, RJ, for having me on, and appreciate all the work you do in the community.